Introduction: The Genetic Revolution. We are living in the golden age of biotechnology. For decades, medicine was about treating symptoms. You have a headache, you take a pill. You have high blood pressure, you manage it. But what if you could fix the root cause? What if you could rewrite the broken code of life itself? Today, we are looking at a company that is daring to do exactly that for some of the most devastating diseases affecting children. We are not talking about a massive pharmaceutical giant today. We are talking about a specialized, high-stakes player in the gene therapy space. Taysha Gene Therapies, ticker symbol TSHA. For investors, Taysha has been a battleground. It has seen the highs of hype and the lows of the biotech bear market. But if you look at the documents from late 2024 and through the third quarter of 2025, something fundamental has shifted. This is no longer just a concept stock. It is a clinical stage company with real human data, a validated platform, and a massive partner in its corner. Chapter 1. The core mission and the turnaround. Let's start with the business itself. Taysha is focused on monogenic diseases of the central nervous system. Monogenic means caused by a single gene. This is crucial because it gives them a clear target. If you fix that one gene, you potentially cure the disease. A few years ago, Taysha had a massive pipeline. Too big, frankly. They were trying to do too much with too little cash. But the management team executed a strategic pivot that we can clearly see in the 2024 and 2025 financial filings. They cut the fat. They deprioritized early-stage assets to go all in on their crown jewel, TSHA 102 for Rett Syndrome. This discipline is what saved the company. Instead of burning cash on 20 different science projects, they focused their capital on the one asset that could be a blockbuster. And that brings us to the heart of the investment thesis, Rett Syndrome. Chapter 2, TSHA 102 and the Rett Syndrome Opportunity. Rett Syndrome is a brutal neurodevelopmental disorder. It strikes mostly girls. They are born healthy, but around 6 to 18 months, they start to regress. They lose their ability to speak. They lose use of their hands. They develop seizures and breathing problems. It is caused by a mutation in the MECP2 gene. Here is the scientific challenge that Taysha is solving. You cannot just dump a new MECP2 gene into the brain. It is the Goldilocks gene. Too little protein, you have Rett syndrome. Too much protein, you get toxicity that is just as bad. You need it to be just right. This is where Taysha's technology, the miRARE platform, comes in. It is a dimmer switch. It allows the gene therapy to self-regulate. If the cell has too much protein, it dials it down. This built-in safety valve is the game changer. In the filings, we see repeated mentions of the REVEAL trials. These are the Phase 12 trials testing TSHA 102 in adults and children. Throughout 2025, the data coming out of these trials has been the primary driver of the stock. We are seeing safety, which is the hurdle they had to clear, but we are also seeing early signs of efficacy. Patients improving in motor function, communication, and seizure control. Chapter 3. The Astellas Partnership. Biotech is expensive. Developing a gene therapy costs hundreds of millions of dollars. Small companies often die because they run out of money before they get to the finish line. But Taysha has a rich uncle. In the filings, specifically the 2024 10K, we see the details of the strategic investment from Astellas Pharma. Astellas didn't just buy shares, they bought options. They secured the exclusive right to license TSHA 102. Why does this matter? It validates the technology. A global pharma giant performed due diligence and decided to put millions of dollars on the table. It also puts a floor under the stock. If the clinical data is good, Astellas is highly likely to exercise that option or potentially acquire the company outright to capture the revenue. It transforms Taysha from a risky standalone company into a strategic target. Chapter 4. Financial Health Q3 2025 Analysis. Let's look at the numbers from the Q3 2025 10Q we just analyzed. First, cash position. In biotech, cash is oxygen. The report shows a company that has successfully raised capital, likely through the at-the-market ATM offerings, or the underwritten public offerings mentioned. They are keeping their runway extended. This is vital because they need to reach the pivotal trial stage without running dry. Second, R&D expenses. You will see a net loss. Do not let that scare you. For a pre-commercial biotech, a net loss is normal. What you want to see is where that money is going. In Taysha's case, the bulk of spending is directed. towards the REVEAL clinical trials. They are investing in value creation. Third, debt. The filings mention the Trinity term loan. Managing debt is tricky for a company with no revenue. However, the presence of partners like Astellas gives lenders confidence. The risk of bankruptcy, while never zero in biotech, is significantly mitigated compared to where they were in 2023. Conclusion. The future outlook. So, where do we go from here? The roadmap for 2026 is clear. We are waiting for the final design of the pivotal trial for TSHA 102. This is the money run. If the FDA approves their trial design and if the data holds up, Taysha moves from a speculative play to a company on the brink of commercialization. The risks are real. Clinical trials can fail. The FDA can delay, but the reward potential is asymmetric. If TSHA 102 works, it becomes the standard of care for a disease with no cure. It opens the door for Taysha to use their platform for other CNS diseases. You are not just buying a stock ticker. You are buying a piece of a scientific breakthrough. For the patient investor who understands the risks of the biotech sector, Taysha Gene Therapies represents one of the most compelling risk-reward profiles in the market today.